How are you? All right, come on everyone, let's get this party started. Just before we do that, yeah, just listen, Dave, you're not the only guy that gets to do a selfie with everyone. There we go, half the room. Okay, so, clicker ready. So I was asked to talk about picking winners and investing in the things we invest in our part of the world. So just to set the scene, what I wanted to do was, click, it works. Just talk to you very quickly about me. I'm going to keep this presentation as high level as possible, and then thereafter we have 15 minutes of Dave in Q&A where you can hand me the difficult questions and we can do sort of deep dives and drill down on subjects in far greater detail. So I am half Lebanese, half German. My parents went to Dubai in the late 60s before it was a country. So I was sort of born and bred in Dubai. I was educated in London thereafter, university, worked for a few years actually in investment banking before coming back home. While I was a student, I used to come back to Dubai and look around and think, what am I going to do? What am I going to do from an entrepreneurial perspective? I always wanted to be an entrepreneur, and I wanted to build a business. And I think this is the point I'm trying to make in this slide. I had no idea. I didn't have any mentors. Nobody advised me. Nobody sat me down and said, this is the kind of thing you should look at from a business perspective and a business model perspective. So what did I do? I just went out there, and intuitively my gut told me to go after a big opportunity, a big business. And on my many trips back to Dubai, I stumbled across this massive opportunity called catering. And it was not just was it massive, it was monopolized by one provider, and that provider was a very traditional provider that had very low tech in the business. That company I exited in 2010. It was serving 60,000 meals a day by the end of it, and employed over 2,000 people. In the process of going out and serving this customer base, there was a huge overlap in a customer base in the hotel sector. So we used to feed all the staff of hotels, much like the lovely people here that are serving us today. And every general manager or HR manager would tell me, I have this massive pain point. And when you hear a pain point once, it's a pain point. When you hear it 10 times, it's an opportunity. And we looked at the market, and lo and behold, it was a massive opportunity. Every hotel, there are hundreds and I don't know, maybe even thousands of hotels today in Dubai, have a commercial laundry problem. So we built a business that basically serviced 100 tons a day for most five-star hotels in the UAE, and employed about 400 people. I think we served about 55 hotels. In the process, I learned a lot, and I'm going to talk to you about what I learned. But I then moved to have the privilege of setting up and co-founding a company called BECO, which is the region's leading job site, region as in MENA. And for the last 4 years, I've been doing BECO Capital, which is one of the earlier venture capital firms. We're not a fund, but that's a technicality which we can talk about a little later. We're an investment company. So again, keeping it very high level, what did we do in order to enter a very, very large and competitive marketplace that was monopolized by one provider? Well, the thing that enabled us to win was in the mid-90s, we were speccing out our own ERP that was basically sitting on internet infrastructure. It was dial-up, but it was basically, we knew our food cost and our labor cost on every single job in every single sector. We were serving military, police, construction companies, hotels, and in the large industry. We knew our food cost and our inventory position and could therefore do automatic reordering. And I think that the ultimate outcome of all of this was we held 3 days of inventory on our books of foodstuff. That was a massive saving in working capital requirements, which our competition had 120 days worth of inventory on the book. So you can just imagine, we invested that money. Just think business model here. We invested that money that we saved in assets. So we'd go to our customers and say, we'll build your kitchens, but give us 5-year, 10-year contracts. And therefore, in a business that is actually competitive and difficult to differentiate from certainly a large player, we were able to lock in, and that's a theme that I'm going to be talking about today. So we were able to create lock-ins, at least that in the medium term, enabled us to build a profitable business, grab market share, and create some sort of defensibility. We did the same thing in the commercial laundry. We basically were processing linens at 50 Celsius. Our competition was doing it at 85 Celsius, a whole bunch of steam recapture and heat recapture and so on and so forth. A lot of RFID, a lot of automation in the business where we spent money on CapEx, but our OpEx was extremely light, and therefore we were able to build a profitable business and take a large market that was actually being served at the time by lots of fragmented traditional players. Now, I know this is not the typical background of this kind of conference, given that it's all about technology, at least internet and digital, but you get the point here. Technology was the key ingredient for us to go in there and really disrupt traditional industries. I think on the bait front, it's obvious what we did. We disrupted the print industry using the internet at the time to distribute content, which is CVs, people. And we're trying to do the same thing through BECO. What did I learn? So I've been told I have 5 minutes, so I'm going to fly through what I learned. But basically, and for those of you who haven't read it, it's a fantastic book, 0 to 1, Peter Thiel. I actually pre-ordered it, so I got it on my Kindle the day it was distributed, and I remember reading it in 3 hours. And when I was reading it, I have to admit, I enjoyed it so much because a lot of it related to my personal experience. And that was building a competitive business is pardon my friends, that's a shitty thing. You don't want to do that. And I tell you something, one thing that we find is our responsibility is to actually inform people that we speak to. We process also about 400 applications, expressions of interest a year today. We probably even do 500 this year. And it's our job to tell people why we don't invest in them. I think that's the greatest give back in a very transparent and concise manner, so that if they're smart and they believe what we're saying, they can either pivot and try and find those things that make a great business. Business models aren't created equal. They're not all worth investing in, and they're certainly not worth replicating, particularly in a world of lots of cloning. More, I'm sure, in a bit on that. Distribution. So we were the first company in all of these businesses to actually build a professional sales force and actually go out there and knock on doors. The best thing about it is it created a huge amount of pipeline in catering contracts, laundry contracts, and companies that wanted to recruit through Bake.com, that you actually created so much demand that you didn't have to entertain price pressure. It's another way of building a great defensible business, but it's something that's not necessarily sustainable over the long term. But these are things that we learned the hard way when you're in that business and you have to innovate. And ultimately, the conclusion is defensibility is, I think, the most important thing, thank you, that anyone can build for in a business. Now, there are many ways of building defensibility. I think intellectual property is one of the most powerful and most sustainable ways of building sustainability and defensibility, in a sustainable defensibility into a business. It could be as traditional as Nutella's secret formula for Ferrero Rocher, which has built a massive business all over the world, or it could be Google's algorithm. You get the point. It's not just in the technology business. IP is obviously very important. Brand is extremely important. In those traditional businesses that I was involved in building, one of the things that kept us afloat and allowed us to continue to build the business and build defensibility was actually investing in the brand. And obviously investing in systems, and a lot of tech went into building systems so that we could scale efficiently and profitably. And then work culture. These are things that people try to copy. They are difficult to copy. They are copyable, but they all form defensibility, which I think, and we think at BECO is extremely important. Why am I saying this? Because we get out of bed. What gets us out of bed in the morning, Emil, I was inspired by all the wonderful stories you told earlier. We want to make an impact in the region. And the way you make an impact, we believe, is by building or investing or finding the next, whatever that business is. I don't want to tout just our portfolio companies, but the next business that is defensible, that can hire lots of people and pay people extremely well and grow an ecosystem. We are 8 portfolio companies combined employ just about 500 people. And these are companies that are growing at 100% year on year for the most part. So you get the picture. And they pay, if you benchmark them against what they otherwise would have, what jobs they would have taken on, they pay a significant premium. What do we look for? Complete teams. So we drink the Kool-Aid. I drink the Kool-Aid when We set up the first business, Bait.com. We hired and assembled a co-founding team of somebody who had deep domain expertise to build the product, somebody who could market it, somebody who could finance it, and somebody who could sell and distribute it. And the same thing we live by at BECO. So very early on, we basically built a founding team that had very specific domain expertise in VC investing or origination, VC investing, structuring, post-acquisition, and governance. And that's the team and me 15 years older, but I'm on the left as well. And there's my colleague, Yusuf. The second thing we look for is it's got to be transformational. If it's incremental, we won't touch it. This is how you used to, even in Dubai, go looking for a place to rent or an office to rent or buy. And this is how you do it still in Saudi today. There's a tremendous opportunity to revolutionize that digitally, and that's what we're doing with one of our portfolio companies, Property Finder. And that's how you do it today from the convenience of your phone. We're riding on two key themes. Emil, again, thank you for the prelude. We spoke a lot about the macroeconomics and the macro drivers. The two drivers for us are, we have the highest growth rate of middle-income consumers in the world, in the GCC, combined with some of the highest penetration rates of digital distribution through the phone. And when we look at businesses that have scale, we look at businesses that can actually create new use cases. I'm going to go 1 minute over if you don't mind. And new use cases are things like Kareem. So my children are able to get around Dubai now without having to depend on me or a driver, and they're mobile. And that's a new use case that didn't exist. So when you actually did a total addressable market for Kareem, and the same thing for jobs, we went and counted the number of job postings in the newspapers and said, shit, there are 10,000 jobs in UAE. Well, guess what? There manner, from a mathematical perspective, the number of people that are in that system. So obviously one person on the internet is useless, 1 billion people are extremely useful. We look for switching costs and lock-ins as well. Final note, some of the things we do for our companies, we can talk about that now in the Q&A, is we spend 50% of our time on post-acquisition. And that is getting them into new markets, Saudi and Egypt being the two biggest markets. And that's not just licensing, that's actually everything from operations to staffing an office and so on and so forth. Key partnerships is something that we get involved in where we have strong networks and strong relationships. Sales and distribution, that's not us going and selling for them, that's us helping them design the sales and distribution strategy and mechanism so that there's a profitable unit economics in acquiring customers. And one of the last things, since I'm short of time, is funding. So I know that a lot of you in this room are my peers and we co-invest together, but when the ticket sizes become very large, as we've seen in the case of Kareem, and we have a few others raising mega rounds as well, you need to find private equity investors from the region or international growth and VC investors. And that's something that we work very hard on from the inception of the investment so that we can have these larger rounds happen and build these amazing businesses. Thank you very much.
Thank you, Dany, and I know we made you fly through those slides, so that was terrific. I guess I have a number of questions to ask you, and some of them will be on the investor side, some will be on the operator side. But I kind of wanted to highlight that your model is quite different from ours. There's definitely a smaller number of companies. 500 is doing a lot of small investments. But I think one thing we share is probably an emphasis and focus on customer acquisition and distribution. And I kept hearing you talk about that when you were doing that. Would you call yourself more of an operator investor? It seems like you're coming from a background where you have been running businesses, and even as an investor, you're highly involved in the business, particularly as it's scaling.
So absolutely. I mean, that's my personal experience. But again, I think the whole point of assembling a team with a diverse set of experiences means that if you look at our portfolio companies, they're not just companies that actually are operations heavy and need sales distributions and all the other things that take place. So there are teams that are 15 guys in a room that are basically doing customer acquisition through pixels and through the screen. And I honestly, I'll be very honest about it. It took me a while to get my head around the fact that those kind of businesses exist and they're actually quite dynamic and powerful. So I'm enjoying learning that process.
So you're kind of in a way maybe disrupting your former process for acquiring customers and emphasizing online platforms as the way you acquire customers now.
Absolutely. I mean, you have to remember the world I come from in the prior decade, 2000, 2010, we didn't have Google and Facebook and so many other platforms to leverage in order from an online perspective to market. Whether it's build brand or acquire customers, these things didn't exist. They started arriving in the mid 2000s. In this part of the world, probably even the tail end of the 2000s. So to be honest with you, I know this is an investor conference, there aren't any entrepreneurs in the room, or maybe there are. It's a very, very different place from a distribution perspective, that you can do a lot of things. Even if you have to have a centralized call center and there's a lot of human interaction in closing a sale, but the very fact of bringing them in from an inbound perspective for lead generation is actually very, very powerful, but one needs skill to do it to create a positive unit economics.
Yeah, and I think your points are spot on there. In fact, we maybe struggle a little bit similarly in that a lot of these methods for online customer acquisition are less than 5 to 10 years old. In fact, a few of them really are only 3 years old. Messaging platforms now, video platforms, picture-based platforms like Pinterest, those models really didn't exist at all 4 or 5 years ago, Instagram. But now they're becoming a much more sort of mainstream way of selling to consumers online.
So just to make a point, one of our prime acquisition mediums for CVs in the world of baked was actually to go to, in the day, Arabia.com and power their job section. And then when they went belly up, we went to Maktub before they were acquired by Yahoo. This is in the early 2000s and became their job channel, if you like. And that helped us acquire a lot of traffic and product and content, which is CVs. Property Finder did the same thing 5 years ago, 4 years ago, 3 years ago with Yahoo Maktub. So they powered the property channel. But today it probably forms, at the guess, maybe 0.5% of the traffic, even though it's quite a large audience. So yeah.
I think one of the challenges, and we've been using this to differentiate in the US, but I think it's even more effective globally, is a focus on not technology companies, but really on internet marketing, combined with maybe traditional business models. And I think this is not well understood. I think there's a lot of investors who think, well, we're investing in technology, which means we were focusing on IP and programmers and algorithms. And actually, if you look at some of the largest success stories in Silicon Valley, Airbnb and Uber, they're not really tech stories. They're internet customer acquisition stories with a small amount of technology bolted on to hospitality and transportation businesses.
Absolutely.
And so I think the real strategy for a lot of emerging markets in reducing risk is not going after really intense technologies. This is relatively basic business models, but using internet marketing as the competitive advantage.
Absolutely. I guess that just, you took a page out of my life. When I go back, we weren't using the internet as a marketing medium in the traditional businesses, but we were using a ton of technology in logistics and RFID and right. All sorts of things, and tagging assets and tagging moving assets. I'm talking about food production, all the way down to actually now using the internet as a marketing medium to both build brand and acquire customers in a very traditional business.
Can we focus a little bit now on why MENA and maybe some unique elements of that? I think we've had a few conversations about what is MENA, what is the market that we're going after? Is it just the Gulf countries? Is it Arabic-speaking countries? Is it adjacent markets in the overall emerging markets across North Africa? What are you focusing on? So
it's a subject very close to my heart. Hassan was talking about it yesterday. I feel like jumping out and giving you my 10 cents, 2 cents. So thank you for asking the question. So our MENA definition, and we're very, very specific about our MENA, is the GCC, Egypt, Lebanon, and Jordan. We don't count Iran or Sudan or Yemen or all the other countries that form the MENA bloc for a variety of different reasons, mainly for geopolitical issues. Now, having said that, that's 150 million people in those 6, 7, 8, 9 countries. 150 million people. The average GDP per capita is $35,000, which is almost that of the US. Now, our friends in India, and Vani Kola, you in the room, put your hand up if you are. There you are, Vani. A lot of time for Vani inspiration. So the Indian story we've been following for years now. And when we look at India, okay, it's a fifth of the world's population is in that one country. And pretty much you can cut the country with one language as well. It's quite powerful. Yeah, you can. Not ideal. But from a transactional perspective, we're enamored by India, and they will always win because they have this incredible population set. And the drivers from a digital or smartphone penetration are just unbelievable. I think they're adding 50 million new smartphone users on an annual basis.
Definitely one of the fastest growing mobile smartphone markets, and it will be the largest smartphone market within a few years.
Sure, and we're very bullish on India. But so we take some inspiration from India and say, okay, here's 150 million people. We have 6 times the purchasing power parity. What does that mean? That means that on an ARPU, on a basket size, on a spend per customer basis, we're actually, we can be in India. And I'll tell you something. If we look at some of our portfolio companies and you benchmark them at the appropriate time stage, right, to the Indian equivalent, because of the ARPU deficit, or in our case, in India's case, or in our case, the ARPU premium, we're actually the same size for 6 times less the traffic. So we're spending 6 times more, which is great news.
Yeah, and I think, again, I was mentioning before, in certain segments, the consumption is just ridiculous, and I think because of access to mobile video, the Saudi and overall GCC market punches way above its weight class, and easily 5 to 10 times above its weight class.
Sure.
What investment areas or trends do you think are interesting for you? And in terms of business models and how you apply kind of your knowledge, where do you want to focus your time and energy?
So look, there are 2 ways we can do this. We can either, and we grappled with this over the last 4 years. We can either say, here's what we want to invest in, go find it, or maybe even incubate it and put teams together and so on and so forth. And we considered that for a while and looked at different models, particularly in emerging and frontier markets. Or we can say, let the entrepreneurial activity just take its course, and whatever meets our criteria, which I spoke about in the prior presentation, we will attempt to fund. So we have a few macro theses, if you like, that are at play here. And one of them is that the prior decade, you had Dubai being the center of excellence in entrepreneurship and will produce these incredible businesses that will have the UAE as a testing ground, improve the unit economics, whatever you want, and then scale it out to the rest of the region. Saudi being the first point of call because it's the biggest market. Well, guess what? Our thesis from several years ago, and we're seeing it play out, it's still very early days, is that the Saudi entrepreneur is going to build a Saudi-specific business or solution to a Saudi-specific problem. And it's such a big market that when they build this incredible business, they're going to take it elsewhere. So it's actually there's going to be a shift in entrepreneurial activity, if you like.
Do you find, you mentioned, Egypt is a big market. I think, historically, not as much internet penetration in terms of the spend per customer, that's been lower. But, now as mobile penetration is catching up, Egypt is going to be a larger percentage of the opportunity. Are you changing the models that you're looking at? Are you spending more time in Egypt for the customer side? What's the entrepreneurial segment look like there?
So every single one of our companies that has entered its GCC expansion plan is either in Egypt or is on the way to Egypt. So it's a very important market to us. Look, I guess it's half the number, or more than half of the 150 that I quoted earlier, comes from Egypt. I'm very optimistic about Egypt. A lot of people yesterday and today were speaking about how optimistic they are about Egypt. I hope we're right. Ultimately, we need Egypt to be a very, very integral part of the ecosystem. What we do find in Egypt is, in the prior decade, Egyptians were building Egyptian businesses. Very specific Egyptian mindset, solving Egyptian problems. It is our job to tell them why we won't invest. We may be wrong, but if they are able to build a business that is transportable across the region, and we're able to have that dialogue, and we're able to be specific about what that means from a building of the product and from a distribution perspective, then I think it can be very powerful. And I tell you something, over the last 1 year, and I don't have quantitative data, but I can tell you qualitatively, because it's something that's difficult to track, that our conversations with entrepreneurs in Egypt are now taking on this new facet where they're actually thinking about building regional businesses, and actually in one case, extending beyond the region. And that's the right trajectory that you need to be on. So very excited about Egypt.
Your structure is probably a little bit unique in that you're not exactly a venture capital fund. You're more of an operating company that invests. Is that correct?
That is correct. So we're a holding company. Our investors are shareholders. They're not LPs. There are many reasons for that, but I think the main 2 or 3 reasons is, number one, when we looked at the region, if we're investing at the seed, late seed, Series A stage, holding periods are going to be at least 3 to 5 years longer than that of our US counterparts for sure. and even our European counterparts. And so we know what that means from a hold period. So we felt that the best way to do that was not to have a finite duration of a fund. And I know that there are ways even through a fund to address that, but we just felt that this was maybe the best way to do it. The other thing was, if you are a fund of the vintage of 2013, and that's not a terribly good vintage, you either deploy suboptimally or you don't deploy and you have negative carry and negative drag. Not a good thing from an investment perspective. So we said, you know what, we don't know. Actually, to be completely transparent, one of the mistakes we made, and we made many mistakes, and hopefully we're smart and we can learn from them, but one of the major mistakes we made when we looked at the world was we modeled it in a linear perspective and said, we're going to continue growing like this. And guess what happened? We grew like this. We, as in the ecosystem, the region. I mean, look at the number of conferences, the number of entrepreneurs, the deal flow. We've gone from 80 to 500 in 3 years. And that's just us, and we don't see everything. So, and you've heard it from the audience. Sorry, I lost my train of thought. What was that? Oh, company.
Operating company structure.
Yeah, so I think the mistake we made was we thought, let's raise 35 million bucks and then deploy that. And how are we actually going to deploy this amount of money in the region? That was back when we initially started raising in 2012-13. And today we regret not having raised 3 times that amount of money, and we could easily deploy that, but we didn't know it. But the nice thing about being a company is in a value accretive manner, we can raise whenever we need to, and we think most optimally match opportunity with cash when we need it, without it being over dilutive or having too much money available to us.
Great, that's a really unique way of thinking about it. I guess maybe, I've been trying to learn a lot about the Middle Eastern market over the last 3 or 4 years. It's still a learning experience for me, and I'm not sure I always get it right. But I would say kind of the regions that you identified, certainly Egypt and Saudi GCC markets are huge customer markets. Lebanon and Jordan, at least when I first came to them, and even the UAE, seemed like relatively small markets. Population-wise, but they're maybe again sort of have entrepreneurial talent in those regions, particularly I think Jordan and Lebanon, that's maybe a little bit more than you would expect. Do you kind of have a game plan about where you're looking for the entrepreneurial talent versus where you're looking for the customers?
No.
Okay.
No, and here's the thing. So we're based in Dubai. And right now, Dubai, to date, and I think for the foreseeable future, is where a lot of the entrepreneurial activity is taking place.
It's the showroom floor.
I beg your pardon?
It's the showroom floor, if you will.
There we go. Today, we think that that's obviously going to change over time. And our bets are that Saudi, as I said, will start building amazing businesses for the region, but first for themselves. And so there'll be a shift in the dynamics from that perspective. Look, I think one of the reasons why we didn't actually go to EBRDs and those kinds of investors in World Bank is because they have not just a financial remit, they seem to have a social remit, and therefore it precludes you from investing in certain territories, GCC being obviously one of them to a certain extent. And we didn't want to have that restriction. We wanted to invest where the best entrepreneurs were building the biggest businesses and the biggest opportunities were, and if that means it's in Lebanon, so be it. So we are about to announce our first Lebanon investment in the next week or so.
Great. I know we're in a tight time frame here, but any lessons learned over the last 5-10 years or more about things? I know you've covered that, maybe changed some of the approach on the internet marketing side. Anything that recently has sort of like sparked a different way that you practice business strategies now?
No, but I think there was a question that was asked earlier about fundraising, and we were all obviously making the case to investors to take your checkbooks out and write your checkbooks. Ultimately, we believe that the more money that comes to this ecosystem, the better off everyone is. The more jobs we're going to create, the more success stories we're going to create, and it'll be a positive feedback cycle, if you like. And with that comes the responsibility to make sure that the providers of capital are giving it to those who perform. So again, another one of our theses is over the next 10, 15 years, you're going to see a consolidation in the investor space where the best investors will get, and it's happening in the US and in Europe, will get the lion's share of a growing pool of capital is going towards the tech space. That's something we're very focused on demonstrating hopefully over the next 10 years.
Well, it seems like you're doing a terrific job, and hopefully we get to work together on a couple of investment projects. Thanks.
Thank you. Thanks, Dave.